Welcome back to the Pleb Underground. The fallout from the FTX exchange just continues. We've already done 2 videos on this. Today, Cointelegraph dropped an article indicating that what happened with FTX was a black swan event. Now, normally, I don't dive into technical analysis, okay? And even though I pay attention to charts myself, I don't expect other people to believe them. Not that I think that charts predicted this necessarily, but I want to maybe show a different angle as to how this, regardless of what actually happened with FTX, the quote unquote overall market at the moment was destined to simply move lower based on the previous price action. And of course, previous patterns do not indicate future patterns. But I do think that they're fun to look at, they're fun to speculate on, they're full of opium, and at the same time, it pisses people off. So it's fantastic. Anyways, let's dive into today's clip. FTX, the black swan event that maybe wasn't. Here's the article from CoinDesk. Bitcoin and shitcoin here to stay despite market turmoil. Members of the community have expressed their undying faith that Bitcoin and shitcoins are here to stay. Now, of course, we are a Bitcoin-only channel. I believe that Bitcoin is here to stay. Unfortunately, what I do understand about shitcoins is that they, unlike a stock which gets delisted and nobody can continue to hurt themselves with it, shitcoins are not exactly the same thing. Shitcoins become zombies, okay? And they just will simply do nothing, have no development, have absolutely no network security, but they'll continue to live on. And unfortunately, scammers can continue to use them as pump and dump schemes. Anyways, I will continue. Even with the FTX and Alameda Research debacle highlighting issues with the crypto market, a community member urged others not to be stressed. The Twitter user argued that the crisis was only a black swan event, that only FTX CEO Sam Bankman-Fried, Binance CEO Changpeng Zhao, and a few others could have seen coming. Okay. Not going to disagree that that specific event could only be seen by the people closest to it. But we're going to make a case for the fact that the market weakness was already here and we could already see that it wasn't going away. Anyways, we're going to wrap up this nice short article because there really isn't much to it. Here we go. The analyst highlighted that errors have to be made in order to improve the system. True. We're going to make mistakes. We are humans, and this is part of learning and growing. It might feel like we're on the edge of collapsing crypto entirely, but Bitcoin and crypto are here to stay. Okay. So they claim that this was a black swan event. All right. You guys know I don't normally do the charts, but I had to do it for this just to provide some counter narrative to this. I don't believe that this was a black swan event in the traditional sense, because I believe that the overall market indicated already that we were going to go lower. And so although this particular event with that particular exchange seems to be a black swan event to all those of us who are outside the circle of knowing, the overall market was indicating that we were going to go lower anyways. So, I mean, I don't really care what news you feed. It doesn't really make a difference. It could have been this. It could have been something else. I don't know. But anyways, let's go take a look quickly at the daily chart. Okay, this is sometimes Zoom is a piece of shit. Anyway, I know I shouldn't be using Zoom. It should be, and then there's going to be like 10 comments telling me the 10 other things that I should be using that also suck equally in different ways. Yeah, don't worry. We'll get to it. Okay, so let's take a look. So right now, at the time of this recording, the price is 16,931. That is the fiat exchange rate. That's right. Shout out to Walton for getting that in my head. That is the fiat exchange rate, 16,915. Now, this is a daily chart, which means each of these candles, okay, are a daily formation, okay? So how that candle gets formed, okay, is that there is an opening price to the day. There is a high price to the day. There is a low price to the day. And then there is a point on the candle where the quote unquote day is considered closed. And that forms the body of a traditional candle. Just to try to give that background. I know though you guys will all beat me up for doing TNA, for doing TA, not TNA. Oh gosh. All right. So look, back to this chart, right? So this is what we see. Each of these candle formations is daily. Now, for me, the reason why I use the daily is because a shorter time span I find is a little too much noise. A longer time span, such as weekly or monthly, kind of gives too big of a picture. So I like to use the daily for this particular type of analysis, okay? And of course, I'm sure that someone's going to make the comment of, well, he's not using a logarithmic chart. You know, that none of this makes sense. Guys, piss off. I use log chart. I use log scale when I have to, and other times I just use the traditional chart formations, all right? It doesn't make a difference. Anyways, so here we go, okay? We're going back to June. So we could see in June, we started to have this precipitous slide, right? We pulled down from the 40K. We started to have this precipitous slide, and here we go. We've got this bottom around here at around the 17,786, okay? So here's the first one. Then we had this other one, okay, around 18,596. Then we have this other one here around 19,152. Okay. So, but then what did we do, right? Like, let's take a look at these peaks over here. 21,985, 22,340, 24,110, 24,363, and then the ultimate peak, 25K, which we could not break. And now take a look, okay? Since we've gone to 25K, so we did 1, 2, 3, 4, 5 formations, okay? So 5 times we knocked on the door upstairs. We said, hey, can I come up? And they're like, no, you can't come up. And then we got rejected. Okay. We got rejected right back to this point right here, 18,646. Now, I know that certain chartists are going to, they're going to indicate that specific numbers matter. And then of course, everybody has, the Fibonacci's and all of these other tools. And it's all fantastic. I love all these tools. I don't give a shit about the specifics. All I do is look at ranges. Okay. And so we came all the way back down here, and then we tried again. We tried again to come up, and we got beat down at $22,500. Okay. So we've got these 5 times that we tried to go up and got rejected. And then take a look. In that same time span, right? From June to the present day, we've got 1, 2, 3, 4, 5. We also have 5 times that we hit support and we bounced off. But to me, the key is we bounced off support and then we never started to produce a new pattern higher. So to me, it was just a matter of time that we were going to start to pull lower. Now, where exactly we were going to go, I have no idea. Okay, we could still see 15K. We could all of a sudden, this could just be the bottom and we may start to go back up again. I don't really care. I try not to speculate on that stuff. Okay. To me, the point is that this issue with FTX may seem like a black swan event, but make no mistake, there's a lot of weakness in the market right now. And the players who do not have their ducks in a row, the players that are playing fast and loose with everyone's value, these people are going to get shaken out. These businesses are going to go under. And this is just simply part of it. So FTX, not a black swan event, just a weak player that got taken out.